Okay, welcome everybody. Today we're excited to have Ari Segal with us, the co-founder and CEO of Caps for Sale. Ari, welcome to the show. Can you tell us a little bit about your background?
Sure. Thanks for having me, Marco. Uh, I actually spent about 25 years running nonprofits in the United States. That's my background, and spent most of my career doing that. At some point in that journey, I decided, along with my brother, to start a real estate investment fund, primarily because I wanted to leverage his way of thinking. He's a professor of analytic philosophy, metaphysics, and has a really unique way of thinking through things and problem solving. So I went to him and I said, "Hey, let's do something together." And we spitballed a whole bunch of ideas until we came across the real estate of the U.S. Postal Service, which up until 2017, I didn't know the real estate under the post office, and the buildings are 30,000 out of 40,000 are owned by individual or funds that then lease it to the post office, which was a surprise to me. And the whole asset class was kind of undervalued for lots of interesting reasons, which I don't know if it's the topic of this podcast, but happy to talk about it. But what we realized is that if we used predictive analytics, which obviously predictive analytics has been used in lots of industries, but in real estate, it was really in a very nascent stage. So we decided we would try to see if we could build a model, and if the model was strong enough and accurate enough that we could leverage it to make investors some money. So that's what we did. We built a model. Well, my brother built the model. I raised the money, and we bought 17 post offices nearing the end of their lease terms, which were considered particularly risky, and then applied the model to it to mitigate the risk, and did very well for our investors. Doubled everyone's money 2.5 years. So that ended in 2020. COVID hit, and then fast forward 2023. I'm living next to my brother, and I said, let's get the band back together, and that's what we did. We decided that we wanted to see if these models would work more broadly and in which particular industries. So we were operating, I would say, in somewhat stealth mode. Did a friends and family round and started developing these models. But my background, I have an MBA. I like building organizations. I like building the culture of organizations, finding talent, recruiting people. But my background is not necessarily the classic real estate background.
Right. Okay, cool. Thanks for that. So
Sure.
what does a typical day look like for you?
It's a great question. um, so I'm primarily CFS. The company is located in Israel. The data team, the model building team, the productization team is outsourced all over the place. Long live outsourcing. But our customer base is in the U.S. So usually I'm up at uh, 7 something, 8 a.m., let's say, starting already to do the work on this side of the pond, working with our team, working to think through different productization, different, the roadmap, our customers, fundraising, you name it. And then starting at about 2, 3 p.m., the calls and the Zooms pick up because that's when the folks who are either using this or investing in us, they're waking up and starting their days. So, and that goes till, I don't know, 10 p.m., 11 p.m. most days. So it's a pretty full day. It's like 2 work days in one to some degree. And that's, before you factor in the startup life, which I've done some challenging things in my life work wise, but this has been far and away the most busy, I would say I am.
Yeah.
So I don't know if you're looking for some exciting morning routine. It's mostly too much. It's mostly too much coffee, and just and just ready to roll.
Well, so what kind of shift are you seeing right now in commercial real estate? I guess especially around data and analytics.
Yeah. I would first. Well, I'll tell you the two shifts I'm seeing, and you can help me. Maybe we can talk about the order of them. But one is people really want to use more data, so they're buying tons of it. I mean, you go on even LinkedIn. well, I see three shifts actually. You go on LinkedIn or you go on any news site, you see there are some behemoths in the data world, but then more and more companies are sprouting up to say like, hey, we can provide some whatever the data is that they can provide. More foot traffic data, lease data, you name it. There, there is more and more data in a structured way than there ever was, and there's an appetite for it. So that's number one. Number two, there's definitely an appetite for using AI and machine learning in real estate. That I've seen, we've seen it for a while. I think it parallels what's going on in society. What I do think is unusual about it, or at least is something that's noteworthy, is that most people, when they talk about that, are talking about large language models. So I went to Blueprint last year. It's I don't know if it's the largest. They claim I think they're the largest prop tech conference in the world. And what was surprising to me is that just about everyone using AI or machine learning is using it to digest enormous quantities of data and then to organize it in a way for the end user. So, construction sites, they have, especially on huge ones, they have millions of pages of, diagrams and work orders and you name it. So to be the foreman or forewoman on a construction site, now you can just type in like, "Hey, can you do me a favor and tell me how many doors need this kind of lock or how much it weighs?" Same thing with lease, extraction or you name it. It was essentially almost entirely large language models. So that's number two that I'm seeing. And the third thing, and I don't know if this comes first or after, but I would say that the funds, the REITs, the investment funds, the institutional capital, all of those people who heretofore uh, their returns have been excellent, but and were sufficient. They're now getting squeezed by those who invest in them. So whether that's pension funds or, again, institutional capital or sovereign wealth funds or individual investors, high net worth investors are saying, "Hey, like it before it was fine. You were just sending me a really nice check. Either margins are shrinking and I need you to make that up somehow, or I want to know that you're squeezing every last ounce of profit out of this." And so maybe that's because the cost of capital has been higher. Maybe that's I can't. I'm not a macro economist, but that has happened, and so I think there's some sort of relationship between all those three. Is that things are tighter, so hey, we need more data, and we know we need to be using technology, AI to help us. And so I think there's this confluence of those factors all coming together at once.
Right. And so where do you think um, Case for Sale comes in comparison to other analytics companies in the space?
Yeah. So, you know, I think this is going to sound like a humble brag. It's not. It's actually a mistake that I think we made. We had this idea of using predictive analytics, and we used it in the post offices, and immediately we were like, "Oh my gosh, this is incredible!" I mean, we got to get this stuff out there, whether it's democratizing the information and having everyone have access to it, and us being one or the source of truth on this stuff, or partnering with different investment funds and helping them do this. And I think we went out almost too quickly. Like there's a step between what we're doing, which is saying, okay, we're taking in all the data and all the trends and all the behavior of the companies and people and the markets and I mean, you name it, and using machine learning to predict what's next and what's happening now, which is sort of like people are just grappling with tech and all the data and trying to understand how to use it. And the step between that is people understanding the tech and the data and having things automated, just regular things that maybe we would have assumed are automated. They're not necessarily automated. So, there's this gap between what I just described earlier, automating that. Just okay, hey, we want to make sure that you're keeping headcount tight. And you need analysts, but do you need 40? Could you get away with 20 using data and AI and automation? Could you? I mean, this is all of AI. Can we decrease the cost to run a business and improve the performance? There's this AI automation thing that needs to happen in the middle.
Right.
And what we're trying to do, and this is again, like I said, I think it has caused us to struggle at the start to get adoption. Is we're like, okay, yeah, we're past that. forget about automation. You should be using these machines to tell you kind of what's going to happen in the future, if for lack of a better term, based on all the behavior in the past. And so, it's, I don't want to say radically different. Both use data. We need uh, the good data that's out there. We need the compute power that's out there. I remember seeing an interview from an old interview of the CEO of NVIDIA, and he's talking about the competition between the GPU and the CPU. And he's like, "Listen, we need the CPU, but we're in a fight now with Microsoft. They see us taking share from them. Like the GPU is something." Where everything's going to be done on the GPU in the future is what he was saying. I think we're thinking the same thing. Like, yeah, we need the data from these companies and we need the compute power. What, but what's really going to be happening in the future of underwriting, real estate acquisition, disposition, 1031 exchanges, I mean, you name it, should be happening with predictive analytics the way we're doing it. So yeah, I mean, it's a big difference. I don't know if that explains it, but that's how
Yeah,
I see it.
that's interesting. So you're saying like the AI automation is the CPU and you guys are the GPU coming in.
Correct. I just thought of that right now
You
as
just
we're
thought of that
talking,
now?
Marco. So
Yeah.
trademark. I don't know if that, or I'll get sued by Nvidia for copying his metaphor. But yeah, I think that's the way. That's a good way of thinking about it.
So tell me about your first few clients. I know you mentioned you did a friends and family, but how was that process for you? And where are you guys now?
Yeah, sure. So again, fits and starts. I think that's the turn of phrase. Fits and starts is how I would describe a startup journey. When we started, we first of all, despite some great advisors telling us like, don't look at shiny objects that are willing to use you. Make sure you stay with your North Star and focus on what you guys want to do. We had one or two early customers who paid us, a 5-figure contract actually to do some initial consulting for them, but they weren't in our sweet spot. We were able to do some great stuff. It was industrial, and we're primarily focused on retail, or almost exclusively currently focused on retail. And we did that because we were like, okay, this is traction. This is great. We're gonna, we'll start doing this and we'll get into some of these firms and we can ingest data while helping them. We had this idea that we could do that. And I would say it took us off course. It was a little bit of income, it was some momentum, but we recognized pretty quickly that that was not our core, not just competency, but what we were looking to do. So fast forward a few months and listening to customers, talking to potential customers, and that's investment funds, banks, underwriters, REITs, full service full service real estate firms. And we heard again about this gap of like, hey, you guys are talking about something that sounds like it's from the future. Even we need help right now.
Right.
And so we went from these incredibly sophisticated 20-page reports with SHAP charts, which are these ways of looking at things in a data science machine learning way, and recognize that that was just too much for people. There are some people who wanted that, but for the most part, they just wanted a regular portal that they could go into, enter an address, get a report, or put their 100 properties or 500,000 properties into a portal and get a report. So we built that and started 2 tracks. One is we're selling reports and subscriptions. So we have actually 7-8 customers who buy these subscriptions. It's not our main group. They sort of want them to. They're testing for us and giving us feedback and iterating. What we're really doing our pilots right now with some pretty large institutional groups, 2 major brokerages who have massive national footprints, and having their brokers and advisors use these reports to help move deals along or help give advice to their clients. We have a large CMBS underwriting department. They're not the biggest, but one of the biggest, doing $5 billion plus a year of underwriting, looking at 3,500 loan packages with many analysts. So they're working with our reports now to see what those look like, and we're talking to and working with, please God, soon, 3 or 4 investment funds that want to do a joint venture of some kind using our reports to identify undervalued assets, undervalued properties, and purchase them. So it's sort of like a uh, threefold roadmap forward. I think if I hadn't made mistakes, maybe they were foreseeable, maybe they weren't. We'd be 6 months in the future and generating. We'd be very clear on our go to market. Um, I think we're clear on our go to market, but we're 2 months in right now, I would say.
Right. So to follow up on that, like what's really been working well for you guys and what's been more challenging?
um, I'll start with challenging. The challenging thing is trying to get people to change their minds about an industry that is maybe, I don't know if it's the oldest industry in the world, apart from everyone's joke about the oldest industry in the world, but, it's the oldest industry in the world. It's actually interesting. It's an industry where seniority and experience are highly prized and valued. I don't know, in the startup world or even in tech or you name it, in sports or, every GM, every investment fund manager, uh, you're seeing them be younger and younger because youth and thinking differently and doing differently are prized. In real estate, I mean, you're hitting 60 and you're just starting the prime of your investment career. So you're dealing with an industry that is somewhat, older, both in age and also in how it thinks, and getting people to change their minds about how they'll underwrite assets. In the past, I think everybody felt like A, I could just call somebody and know, and B, I could sit around and count the foot traffic on my, with a little counter, and I could, I have a gut sense of all of these things. Uh, for lots of reasons, that should be changing, but that to me has been the biggest impediment. Just getting people to say, "Oh wow, like a machine can do something, or at least help me do something better than I could do it on my own." So that's number one. An impediment I would say is, like I said, people are still trying to figure out regular tech and AI. And this is, we're coming along with this very, very, almost like, again, 2 to 3 steps forward in the future of how they could be using this. So those are the problems I would say are the challenges in implementation. Um, the good news is like I said, there's headwinds. I think the institutional investment funds, sovereign wealth funds, major investors are saying, "Hey, like no, good enough is not good enough. The way you did things needs to be better. You need to embed AI, machine learning. You have to tighten this up." But also, we've learned, how to talk to people in a better way. Rather than telling them how brilliant we are, we want to know what their pain points are. And once they share with us their pain points, we can then tell them how our solution, even though it's, a very sophisticated and forward thinking solution, it can still help them in the, to deal with those pain points. So talking about CMBS underwriting and how many deals they have to look at and how fast that has to go and how quickly they need to underwrite. So if I'm able to say to the and train new analysts every 2 years in their, way of doing things, if I can tell them, which we can, hey, we can help you both automate that and improve that system. That is a much easier sell than what we were doing before, which was like, hey, we're here's this thing. It can kind of replace everybody. Would you like to use this? I don't think we quite said it that way, but that's I think how it was coming off to people. And so we've learned through starts and stops, trial and error, what works and what doesn't. So that's working way better.
That's good. Good to hear. So like in
Yeah.
terms of that, in terms of like bridging the gap in between what you guys are offering and what's there now, are you guys um how are you approaching that? Are you with different clients?
Yeah, so I think there's a couple ways to navigate it. One is we could serve as that intermediary step, whether that's, like I said, automating what firms are doing and then adding in the CFS score, the CFS magic, getting them sticky on a platform. That's one possibility, and we're building that. I mean, we have that. It'll be coming out in about I think 5 weeks, but we're in beta testing and it's looking pretty remarkable. We could also partner with with all the existing CRM for firms that are already working with companies and have their deal flow and their current assets in a CRM, but want an API that helps them fully, accurately underwrite and mitigate risk. So those are the two options we're looking at. We're moving forward on the self, where I can have the locus of control is with us. But as I've seen in this, you got to keep pushing ahead and doors and windows open. So we may end up partnering with a CRM group, and we've been talking to a few, but we're building our own interface to help get this sticky, not just for the big group, for the big funds, but also for the smaller investors who just, who can't compete with the large and mid-sized funds. We'd like to help them be able to compete in that space. So that's how I see us moving forward to bridge that gap with them. We also are putting out a void analysis tool, which is, I'm not sure if that's bridging the gap or a whole other way of a whole other line, something for you and I to talk about. But it's part of that whole the whole ecosystem of the proper way of fully underwriting and thinking about the way to value properties.
Right. It's almost like, yeah, you got to give them the baseline AI, and then you sneak in your product, and all of a sudden they're like, "Where's this coming from? Like, what is this stuff?" And they need more of it.
Marco, I wish someone had said that to me 9 months ago or 12. The good news is we just kept building the quality of our models. We just kept improving them, adding more data, building them. So we didn't stop. And, it's not like we lost a year, but I would say we lost 9 to 12 months of just, it's exhausting. So I wish I would have thought about that about a year ago, exactly how you framed it.
Was there anything like surprising you about implementing AI in CRE?
It's a great question. Is there anything surprising me about implementing AI in CRE? Sorry for repeating the question. I'm trying to think of an answer while I repeat the question. No, everything's been what? Okay, but you don't use that, or oh, you do use that, or you're that big and you aren't using predictive analytics or AI, or like I would say that was surprising. It's not to say no one is using AI and predictive analytics. There are firms that are out there using it. I would just say I was shocked that it was all LLM to without painting it with such a broad brushstroke. But I walked out of I mean I couldn't believe it. I walked out of Blueprint. I was like, is there no one else really doing predictive analytics? I mean, there are some firms that are doing a little bit of it, but for the most part, it was not the type of machine learning level of modeling that is happening in finance, in baseball, it's every sport, and I mean, you name it. Amazon is doing predictive modeling on customer behavior and exactly what they need to do to get you to click buy. Real estate, even the people doing predictive analytics, even the firms doing predictive analytics, are not doing it at the level that it's being used in other industries. So that was actually surprising to us.
Yeah. So where do you see yourself in 6 to 12 months, or where do you want caps for sale to be in the next 6 to 12 months?
Yeah, I'd like us to roll out a product that the broad marketplace is using, just even to democratize to some degree this type of information, so that when people are talking about, I don't know, people love giving metaphors or comparisons to something else, but like just the Zillow, like what's your Zillow score? People should be asking what the FICO score is. I mean, if you're underwriting a borrower, you want to know what the FICO score is. That is predictive analytics, by the way. I mean, that's literally almost identical to what we're doing. You're taking in all these factors and trying to figure out in each situation, what's the likelihood that this borrower is going to default or not. That would be my ideal, is that people are saying, what's the CFS score? Like I'm still doing my own underwriting. I'm still doing my own whatever, but everybody should be saying, what's the FICO score of this? I'd like us to be that answer. That's a big, dream, and I'm doing everything I can to get there. So I'd like to be in that conversation, certainly.
I guess, like, what would, if that bridging were to come a little quicker, what would success look like for you guys in commercial real estate?
I think there's two possibilities. I mean, one is, like I said, it's just not just brand awareness, but it's being the source of truth. I mean, I don't like using that term, but each industry typically has a single source of truth or a few of them. So, I don't know, Moody's and S&P are telling you the company and the quality of it. Another, I don't know, there's some sports analytics that'll tell you this is, they're that source of truth for sports. And each industry that uses this has a source of truth. Sometimes it's multiple. So really, I mean, that would be, I think we should be part of that conversation. I'm sure there's lots of smart people out there who, you know, as predictive analytics becomes more popular in real estate and people realize it's necessary, so more and more competitors will pop up, I'm sure, and that's a good thing. I don't think there's a source of truth, but I do think what we've put together is pretty unbelievable and will only get better. And so that to me, if we accelerated, I mean, that would be, it would just be happening and people would be using it and talking about it. And it would be sort of like, where's the CFS score for this property when a broker's listing it? And a bank would say, sure, happy to underwrite it, but we need to see the CFS report. It doesn't mean it's the only part of our, underwriting process, but that has to be a part of the process. Forward future, I think I don't want to scare people, but I think there's a way that, the same way algo trading happens in finance. I know real estate assets are still much more unique, and it's not like with financial instruments. So there's a way of really tokenizing them and being you can trade them very rapidly, and you're using things that everyone agrees upon. But I do think it won't be so far into the future where you'll have sources of truth that valuate um, what properties are actually worth in a way that tells you, like, here's what this property is going to produce from a financial perspective, and that'll allow more real estate more real estate purchases, sales, exchanges. It'll lubricate different markets, including the 1031 market. It'll lubricate, just other transactions, because people will be able to trade them with less friction when there's a way of truly understanding what the value is of this asset.
And what piece of advice would you give to someone starting in data analytics in PropTech?
Don't get discouraged. Really, like, at some point it's gonna at some point the something will drop. What is it called? The coin will drop? No, the something will drop, and it'll start being used. I would also say to be humble. Like, we have learned a ton from people who have been in real estate for a long time. And I think sometimes data people and machine, you come in and you're sort of like, well, the data's the data and it knows all, but it doesn't. It knows what these machines only know what they see, or what, you can show them and teach them. And they do it 1,000 times, a million times faster than human beings, but there's still something to human knowledge, intuition, experience. So, like, on the one hand, I would say, be confident and keep working at it, because it's gonna happen. The revolution will come within CRE and data and predictive analytics, but be humble along the way at the same time. There's a lot to learn, and there's a lot that the data doesn't know and the machines don't know. Um, so those are the two pieces of advice I think I would give.
Right. And no, that is interesting. Like, you hear a lot about the language around using AI and, try to balance between the data and what the AI is producing versus, that sort of human touch. Or
They call it human in the loop. Every once in a while, there's a new term that comes out that you have to use. If you don't use it, you're sort of like considered passe. The human in the loop and the AI agents and the, agentic AI have to, but yes, I think there is something to it, that there's a human touch. You can't just spit out numbers. People need, at least now, some human part of that to make sure that there's trust built, that they understand how to use it. So I think you're completely right.
are you guys positioning yourselves around that idea, if any?
That's a good question. For now, that's why we're not rolling this out enormously. I'm not saying we would just roll it out tomorrow. That's a huge lift also. But for now, we're very happy to be doing these pilot programs and have these, customers who we work with, because we're doing it very much by hand. We're giving them this incredibly sophisticated stuff, but white gloving it for
Right.
now, so that we see, like, hey, we're going to help you understand these reports. We're going to help you understand what this means. We're going to help you understand it's a black box to some degree. I mean, if you don't have a background, a degree, or PhD in data science. So it's still going to be a black box. I can't teach you data science completely, but I can help, bring you along, understand how models are built, where we know models fall short, where how we build great models and what that looks like. So yes, I think there has to be, at least until there's a certain sense of trust, human touch as part of it. And that's what we're doing. That's why we're moving the way we're moving.
Great. Okay, well, Ari, this has been fantastic. Thank
Thank
you
you.
for sharing these insights on AI and how it's transforming commercial real estate. So tell us, like, where can our listeners find more information about you or about Caps for Sale?
Sure. We have a LinkedIn page, just caps for sale on LinkedIn. You can do our website, CFS, like caps for sale, NNN, like triple net realty. So www, CFSNNN.com. And we're going to start pushing out a Substack uh, and other ways, but they can certainly reach out to us. We're happy to talk to anybody who wants to learn more, who wants to understand what we're doing, who's interested in using us, participating, investing, you name it. Um, we're happy to talk to anybody on this journey. So please reach out to us.
Awesome. Okay, amazing. Thank you, Ari.
Thanks. You got it.